All right, welcome everybody to StartEngine's newest webinar series. Please file in. I'm going to wait just 30 seconds or so for everyone to join, and then we'll officially kick off. Lewis, hello, how are you? So just like Lewis did for everyone who's joining us, we've got about a 30-minute presentation for you guys today, about 10 or 15 minutes of myself. I guess I'll go straight into introducing myself. I'm going to share my screen so everybody can see the presentation that I'm going to put together here. All right, hopefully everybody can see that. I'm gonna get started. First and foremost, I'd like to introduce Mike Winston, founder and executive chairman of JetToken. Mike, thanks so much for joining us today.
Very welcome. Thanks for having me too.
All right, and thank you everybody here for joining us. We're in the midst of a pretty remarkable time, both with everything going on and also within fundraising specifically, and we thought it would be prudent to talk about a key piece of fundraising that StartEngine and Mike and JetToken really believe in. That's something called always be raising, the idea of constantly raising capital for your business, ripping the old model of raising around, taking it down, proving metrics, hoping that there aren't any bumps in the road, and then going out and justifying another valuation instead of having a round open constantly and taking advantage of exciting business updates to fuel more capital coming in. So today's webinar is called Fuel Your Growth with a Simple Principle. Don't Stop Fundraising. My name is Allen Jebsen. I'm the VP of Sales and Business Development here at StartEngine. And before I get started, I'd just like to encourage everybody either through the chat section or through the Q&A section to please put in your questions, your comments. We're going to have time with Mike to answer hopefully all of them if we can get to it. And I'm going to see your questions and weave them in as well. But please, either through the chat and the Q&A, don't be shy with the questions. But let's get started here. So the concept of always be raising is a pretty unique one for StartEngine. Always be raising is the principle that you can have an ability to raise capital for your business without having to slow down fundraising and slowing down your business itself. It's the idea that your offering can be live on StartEngine, whether you choose regulation crowdfunding or regulation A+, through multiple years, that span multiple years of time. And at the same time, you're constantly growing and fueling your business. The idea to actually take what you've built, update your campaign page over a 6-month period of time, over a year period of time, over a 2-year period of time, and have an offering that can accept millions of investments is something that is brand new to the fundraising model. And it's something that Mike here and JetToken has championed. So we're going to go into a large detail, but I think the first thing to talk about is you might be wondering, well, how does equity crowdfunding fit in, and how does fundraising fit in this current time that we're facing in the COVID-19 times that we're in? And StartEngine has been actually pretty fortunate during these times. Off the backs of companies like JetToken, and we'll go into their extremely, I would say, rocket ship success or jet success, no pun intended, and many other companies. We put together a graph here for everybody to look at the total investments on StartEngine pre-March, pre-COVID, and what we're seeing almost to date. So if you could take a look at it, what we were raising per day throughout the platform was around 150,000. That was across all of our different companies on StartEngine. When COVID really hit and the shutdown ensued, we were just like everybody. What is going to happen to the business? Our investors, we saw the stock market plummet. Our investors going to pull out their money in high risk investments. How is it going to affect everybody in the marketplace? And really a remarkable thing happened. We saw money being displaced from the public markets and come into private markets, specifically in startups. I think the ability for investors to say, I may not want to put in a larger percentage of my portfolio, in my discretionary portfolio in public markets right now, but the idea to maybe put in $500 or $1,000 in a company like Jet Token or others on StartEngine and have that high risk, high reward mentality 5 or 7 years down the road potentially, that's to me a pretty inelastic decision for an investor to make. And I think COVID just accelerated that mindset. And we have been extremely fortunate in the success so far. If you look at all the way from March into May, we've been from 150,000. We are up to right around at the spike of it, close to $600,000 raised per day on the platform, up from 150,000 just 2 months ago. So right now, for an entrepreneur, there has never been a better time to look at a platform and to look at the fundraise opportunity of going directly to the crowd and directly to your community, to people that you know will support and believe in the company over traditional investment vehicles. Those will always be there. Those are always rooted in our traditional model of fundraising. But right now, in the current state, we're seeing those funds shrink. We're seeing less conversations with angel investors. We're seeing VC funds maybe protecting just companies within their own portfolio to keep them afloat, but they're not really interested in investing in outside companies there. So a lot of investment has shifted towards StartEngine, towards equity crowdfunding, and companies are benefiting from it. So long story short, now has never been, there's never been a better time to raise on StartEngine. Now, the ability to take advantage of the time that we're in is really to understand the concept of what's possible on StartEngine. On StartEngine, you are raising money through equity crowdfunding through 2 different regulations. One regulation called Regulation Crowdfunding. That's where you get capped at $1 million, $1,070,000 raise amount. Jet Token and Mike first started in the regulation crowdfunding arena. And then the second regulation to take advantage of is called Regulation A+. That's where you can raise up to $50 million from the general public. And currently Jet Token has a Regulation A+ raise live on StartEngine. But there are things to know about raising capital through the crowd, through equity crowdfunding. The first thing is your financials are public. So you do need to be comfortable with that. Your top line balance sheet, P&L, cash flow, your financials are public. And I get that question all the time. I'm pretty sure I had that conversation with Mike as well of, hey, what does this really mean for my business? This seems pretty vulnerable. I'm not sure I'm comfortable with it. Well, I think Mike will be able to answer that. There's risk reward with everything that we choose to do in life. And this is something that if you're able to be successful, I think the reward vastly outweighs the potential risk of opening up your financials, even if you are a small business. You know, we're not talking about public markets and that sort of thing. It's about execution. It's about vision rather than, I would say, strength of your financials, at least in maybe an earlier stage. So successful raise takes focus. Mike will talk a lot about that, but this isn't something on StartEngine where you can go live with an offering, you go to bed at night and you wake up and you get $1 million in the bank. I wish it was personally, but it takes hard work and dedication. That's part of what StartEngine brings to the table is our customer service, our marketing expertise, our best practices that we're able to share and really guide our companies to raise as much money as capital. There's ongoing reporting obligations that are that have to be met. For regulation crowdfunding, you do have to report and update your financials once a year. And for Regulation A+, you do it twice a year, and once a year a full audit. However, the advantages of raising capital, you're setting your own terms, you're in control. So there's no recap of the company. You're setting typically voting or non-voting common shares. You're in control of your valuation. You have to justify that to our compliance team and to our review team, but otherwise we're not forcing you to offer preferred shares or have these types of rights attached to it that you might see in other negotiation tables. You're building your brand ambassadors. I'm excited to talk to Mike about that and what he's seen so far, both from his regulation crowdfunding raise that ended last year to his Regulation A+ offering, the ability to take on thousands of investors that now become your brand ambassadors and really can help propel your offering moving forward. The idea that your raise actually achieves multiple goals. So Mike might be in a different stage here, but for a lot of companies, you've got sales that are running at the same time as raising capital, and the ability to actually increase your brand awareness through equity crowdfunding. You think about it, you're marketing your offering at the same time that you're raising capital. So we've had tons of companies come back to us and say, not only did we raise $1 million, but our sales increased for the business because we're spending marketing dollars increasing our brand and marketing to our customers that become investors that also maybe turn into customers, or our customers get become repeat customers because of the process. And then I think the biggest advantage is you raise consistently and are always prepared for difficult times. So as everybody knows here, being an entrepreneur, there's ups and downs all the time. It's not a linear progression by any means. The ability to have an offering open at any point in time means you can disperse on cash weekly or bi-weekly or monthly, and having that flexibility and having that strength in your balance sheet is something that traditional fundraising doesn't allow you to do. You've got this pot, this set pot of capital, and you need to allocate it, but maybe you're fueling for growth and you're spending on expansion, and you hit a bump in the road and all of a sudden you don't have the reserves that you're looking for and you don't have anywhere to turn. Where the idea of always be raising on StartEngine is you're not going to run into that problem because you're always going to have an offering open. You're always going to have a place to capture investments in real time, and you can control your cash flow that way. So this is a bit of the StartEngine process here. When we first speak to a company, the biggest hurdle is really education. I had a lot of conversations with Mike about what really does StartEngine mean? You know, what does equity crowdfunding mean? How do I take advantage of this? What is the StartEngine process? Well, we're going to educate you on the ability to raise capital from the general public. What are the rules on the regulations themselves? How do you take advantage of it? Then if you're interested in moving forward and we think it's a good fit, we're going to move forward and sign an agreement with you. If you're of a certain stage in the business, I would say anywhere looking from your seed round up to a couple $1 million, what we recommend is regulation crowdfunding, the ability to raise up to $1,070,000 from the crowd is a place where you should start, not just because it's you want to raise around that million point. Even if you're looking to raise a few million, I still recommend it. But the ability to actually get up and running on a regulation crowdfunding offering, you're looking at much less upfront legal and financial costs, maybe $5,000 or $10,000 or less, compared to a Regulation A+ offering where the upfront legal and financial costs could be between $50,000 to $100,000. And the time period to actually onboard your campaign on a regulation crowdfunding offering could be weeks, whereas a Regulation A+ offering is definitely months. And Mike will talk a little bit about that as well. So when I speak to entrepreneurs and they're looking for $1 million, perfect, regulation crowdfunding. When they're looking for 2 to 5, my recommendation is still, let's use regulation crowdfunding as a test run to see if equity crowdfunding and to see if the crowd really resonates with what you're doing. If that's the case, then we can take some of that capital, put it towards the upfront capital of a Regulation A+ offering, and now use your marketing strategies that you're able to learn and perfect in the regulation crowdfunding raise and scale up. And then really the next part in the process is StartEngine Secondary. This is something brand new that we're about to announce to the public. We've got a beta test in place for our StartEngine Secondary market, where you will be able to provide liquidity to your shareholders either immediately or after 1 year, depending which regulation you sell securities in. So the ability for Mike and all entrepreneurs out there to market their fundraise and say, not only are you going to get a piece of equity in my business and potential value moving forward, but you will also be able to sell out your shares within maximum a year's time from when you put in, instead of having to wait the typical 5 to 7 year startup investment window of a potential acquisition or IPO. Is something that's going to drive, we believe, so many more investments. If you can say, you can invest in the company, you can believe in what we're doing, but you also have the flexibility of potential making money on your investment a year or two after investing. So StartEngine Secondary is the next and final piece of the StartEngine process, and something that we're really excited to announce soon. So this is just a stat that we pulled. I mean, we've been coming up with this model, this always be raising model, for quite some time on StartEngine. We see a lot of companies that raise the first regulation crowdfunding raise are now moving forward with a regulation A+ raise, or even a second regulation crowdfunding raise, depending on the stage that they're in. And it's pretty remarkable. Over 50% of companies believe in always be raising and have returned for a second or third funding round. And it's something that we definitely we preach, but just in a minute, I'm gonna talk about how we in fact practice what we preach. So StartEngine ourselves, we've been in your shoes. It's something that we're extremely proud of. We love talking about it on the phone with every one of our entrepreneurs. We're not the platform that just says this is the best way to raise capital, but we look for fundraising on alternative methods. We're the only platform that's going out there and saying we're doing it exactly the way that we're talking to entrepreneurs about. So we've raised over $18 million from over 4 regulation crowdfunding offerings and 2 completed regulation A+ offerings, and have over 9,000 shareholders for ourselves. These shareholders for us, and I'm curious to hear Mike's opinion on this, but they've been our super users, our brand ambassadors. We are testing all different products with them, all different feature improvements, and they've provided us from anywhere from employee referrals. We're expanding a team and we're looking for great team members to join, to the StartEngine Scout program, where they're referring other great founders that we're speaking to and we potentially can help fundraise, to beta testing new products. So the ability to use these shareholders, the latest thing was we even asked them to petition and write a letter to the SEC about a rule change that we think will help our entrepreneurs and investors. So using and capitalizing on this brand ambassador group is something that is really key here. And just last week, StartEngine announced that we have our next regulation A+ offering open, a $41 million round that raised over $1 million in the first week. So I'm happy to answer any questions about that, but we're really proud of the ability to say we practice what we preach, and we believe in the ability to always be raising, to always have an offering open. And I can tell you personally, with business decisions we've made for the organization, having that cash flow, that influx every week or every other week has made business decisions that much easier and more flexible. So now the fun stuff. We're going to go into Jet Token and Mike just a second here, but I want to provide a little bit of context introduction. So Mike and I first spoke, I think, over a few years ago, and he had this big idea for the business of privatizing modern aviation and democratizing it, kind of akin to what we're doing at StartEngine with access to capital. This idea of access to private air travel is something that is a really big idea, and it's something that is really exciting. And in 2019, he decided to move forward and jump into the regulation crowdfunding space. And really it was a massive success. He raised $1,070,000 from over 3,000 investors. And when you think about the average investment that it took to get to $1,070,000, pretty incredible that he was able to get over 3,000 investors. And that was in large part to a paid advertising strategy that he'll talk about just in a little bit. And off the heels of that success, he has moved forward with a Regulation A+ offering on StartEngine. This year, I believe in January, it kicked off, and he's raised over $3 million, has over 10,000 investors, and in the last few weeks has been raising at a clip of around $400,000 to $500,000 per week in the offering. So without further ado, I want to introduce Mike Winston, CEO and Executive Chairman of Jet Token. Mike, again, thank you so much for joining us today.
Great to be here, Alan. Thank you very much.
So Mike, I guess my first question I think a lot of people would ask is, what led you to Equity Crowdfunding? And how did you make the decision that it was right for your business? What were potential hesitations that you faced, and how did you overcome them and ultimately move forward?
Well, I think, just setting my video here, I think that we came to Equity Crowdfunding because at the time the company was in an accelerator program in Israel that didn't take any equity. And we thought, well, why don't we start the fundraising now instead of waiting till we graduate the accelerator. And we were getting all this great coaching, but when that coaching was done, we were going to have to confront, venture capitalists. And, we thought we'd like to get going now. Why do we want to wait? And so we started with StartEngine. It seemed to me to be a very practical idea to be able to bootstrap and draw down what was being raised as it was coming in. So we could get to our milestones faster. So that by the time we got, and my thinking at the time was that by the time we got to do a venture round, we'd be in much better position. But then, of course, it turned out that StartEngine was such a miracle that a venture round didn't seem necessary because of the Reg A option. And there's also something unique, and then my answer stops here, but there's also something unique to Jet Token, which is that venture capitalists like private planes. And I mean, everyone kind of likes private planes, but in particular, a lot of guys had a hard time separating their desire to fly privately and get a special deal with the business of private aviation, which is a very human and I think understandable problem, but one that as a startup and as an entrepreneur, we had to solve. And I think StartEngine has done an incredible job helping us solve that.
How did you overcome the ability to, I get a lot of questions. The two biggest questions that I get from founders is, how am I going to deal with all of these shareholders on my cap table? And I don't exactly want to show my financials.
Right.
Did you come across those hesitations personally?
Yeah, I thought about both those issues, and here's where I came out. With respect to the cap table, there's a nice part to it. It's not all downside. Yes, if you had thousands of people calling you every day with questions, that would be a problem, right? But our experience is that doesn't happen at all, even a little bit. They tend to email you if they do, and you might get one or two every couple of days, if that. And it's largely because people tend to take a long-term view on an early stage company, and they know that you're not going to have constant updates. But to address that, and when we got to the Reg A stage, we set up, of course, our own website for Jet Token, and we created a special investor section, which has links to our SEC filings, all of our posts to social media, which go out every day. We hit the 3 different social media sites, with an image of an aircraft and a little something, so people that know that you're still in business, they're in business with you, and that you're out there doing things.
Right.
And then finally, on the topic of investor relations, you can always hire an investor relations firm to do it once you have the scale. But
you're not seeing too much questions or, yeah.
No, it's really not about that. At the average investment size of about $250 to $300, you're just not top of mind, unless you go out to the shareholders in a blast email. There's more I could say on the issue of cap table, but I think that answers your question.
Yeah. So talk to me about engaging. I had a few points there that we've seen personally for StartEngine help us, but have you mobilized your brand ambassadors yet for anything in particular?
Right now, they answer questions on Facebook for us before we get a chance to answer them, which is a great luxury. because most of our marketing spend is directed toward Facebook. And it's a nice thing about that, which is that once you get to X thousand investors, they're prospective customers too. And that's a customer pool potentially. Even though the investment size is small, there are some very high net worth people in there creeping about, as it were. Creeping about's a terrible term, but they're in there. You can find them. And I think that the perk, right? The perk is in large part, was originally kind of designed for goods or services that have a lower ticket price, right? And then you give away the perk and it's like, oh, I invested in a company that makes the product. I get to try the product. I love the product. Now I'm going to become a customer.
Describe for the audience what you mean by perk, Mike.
So if you do a Reg CF or Reg A, you're required to offer the investors a little gift, a little something. And it needs to be company related. So in the case of I think there was like a cosmetics or soap company on StartEngine that had some success, and they gave away like, some of the soap stuff, and that made sense, for a certain level. And as you invest more, you get a better perk. In our particular case, we gave away logo merchandise related to the Honda Jet. And I think you can see one here on my shelf. Gave away a little plane for the desk at a certain level. Hats, things of that nature. And at the very highest level, or the highest two levels, we gave people now in the Reg A a tour of the Honda Jet plant in North Carolina. And then finally at the top level, actually a test flight on the aircraft, which everybody wants.
Yeah.
So we finally gave in and we said, okay, let's make it, but it needs to be, appropriately priced.
Right. Great. Mike, question from the audience is, what were the costs associated with regulation crowdfunding and regulation A+? I get a lot of times entrepreneurs are saying, what exactly is the cost of capital? In your opinion, how did the costs compare to what you're able to raise for the business? And, are there things that you can advise these entrepreneurs of ways to look at the potential costs of moving forward with just equity crowdfunding in general?
It's the best money you'll ever spend. It's unbelievable to me. The value is outstanding. I think it's something that is a function of Howard Marks' technology background and being able to build, business logic that carries out a lot of the functions that would otherwise be very high cost for an organization that for StartEngine are lower, and so therefore they can offer this incredibly compelling price point at the Reg CF level. In an eye blink, you'll spend on legal what you would spend for the entire StartEngine offering if you don't do it right at the very beginning of things, versus getting the whole Reg CF filing done. All you need is $50 to go form a corporation, an appropriate amount of work at the pre-seed stage to validate your business, and then you can make a credible approach to StartEngine, who for not very much money will get you into the Reg CF market. Does that answer your question?
Yeah.
Well, I didn't talk about the Reg A. Should I answer that too?
No. I think we can get into Reg A a little bit. Focusing on the Reg CF, Mike, how were you able to be so successful? There's questions in here from the audience of specifically the advertising service you used and how successful it was, but we'd love just a general sense of your experiences and how you're able to raise $1 million from over 3,000 investors.
Sure. So it's Facebook marketing. That was our big focus. And I'll tell you, at first, it takes Facebook time to get it right. And Facebook's ingenious, but it does take time. So it's not only that it takes them time, but it takes you time, because you have to come up with the right words, the right ad copy, has to be compliant, and you have to come up with the right images, the images that people respond to. And you can't have too much text, or the wrong photo. And so you'll spend the first couple of months really trying hundreds of different combinations at relatively low cost, by the way, to get that right. And then you'll see what your winners are, and then you start to increase the spend a little bit. And what's wonderful about StartEngine is that you can begin to draw down some of the money you've raised, even though it isn't too terribly much necessarily at first, depending upon your idea. And you can push that marketing forward. At least that was our experience. So we truly bootstrapped, that process. But it's going to take time. Don't open your campaign and think, oh, I'm going to raise $1 million in a day. Unless you have a big community behind you already, that's not going to happen. You're going to spend 3 months, perhaps, tuning that Facebook and getting it right. But during that time, you're going to be getting money in. And then, man, it's incredible once you actually hit the efficiency.
And then what were kind of the average ROIs that you saw? I'm seeing a few questions of the cost of advertising.
Sure. It's important to understand that you're not only advertising for your capital raise, but you're advertising for your business. You're acquiring customers. We've acquired customers as a result of this marketing spend. So when you think about it from an accounting perspective, how you record that, part of it's the offering cost, but a lot of it's just marketing costs for your company. So, I mean, the answer is it varies greatly by how attractive your idea is. A bad campaign, you know, or let's say a very, very mediocre campaign, for every $1 you spend, you know, you'll get $1 back and you break even. That's bad. It may be how you start out, so don't lose hope. Keep hope, keep the faith. A very average campaign, you'll get $2 in for every $1 you spend. So you've paid for the cost and you've picked up another $1. Right? A great campaign is when you're doing, you know, 5. You put in $1 and you get 5 out, or 7 out, or 10 out. And I'll conclude by saying our experience is that when you get to the higher levels of your raise, when you get to $900,000, people have a lot more confidence in you. And so your marketing spend, your marketing return can go way up. I mean, you know,
Right.
we hit the double digits at some point toward the very end of our Reg CF campaign in terms of marketing spend, which was remarkable. And we're doing pretty good in the Reg A.
So let's talk about the Reg A. I want to talk about a few things. There's one good question here that I think entrepreneurs are curious about is, how do you price your regulation crowdfunding offering? And then once it maxes out, you know, let's talk about the time period between your end of the regulation crowdfunding offering and your start of your Reg A plus. How did you think about your Reg A plus valuation and increase in price per share? And how did you think about that also with the time span in which you're raising the amount of capital potential in Reg A plus?
There are 2 big answers. One is, what milestones did you hit between the 2 raises? And where does the valuation need to be for it to make sense over a period of time and based on your expectations? You know, we're in aviation, so the moment you take delivery of an aircraft, it's going to do a minimum amount of utilization. That's going to create a fairly big revenue stream, which is helpful in valuation. And in other businesses, you know, it's smaller ticket size and revenues are a little harder to come by or grow more slowly. And so the valuation was probably needs to be reflective of that. I will tell you that in the Reg CF, when you have a startup company of any kind, a valuation somewhere between $5 to $10 million is reasonable and customary, because if it isn't, then you have dysfunctional outcomes later in the life of the company. And venture capitalists will tell you this. They don't turn their nose up at that valuation because that's not really how they're thinking of it at that point. Valuation is something of an insensitive thing. It's the tail wags the dog in that context. Later, when you move on to Reg A, it's a little more milestone sensitive and a little more particular to your industry. In our case, we launched a live app in the iOS store and began generating revenue from charter. So that was a huge milestone for us. That was one of the biggest things in our business, right? So we had a pretty easy time, you know, understanding and justifying the next valuation step. And of course, we're just about to take delivery of a Honda Jet here in Nevada, so that's helpful too.
Yeah. Okay. Great. Well, Mike, then let's talk about, okay, you've priced your Regulation A plus offering. In your experience and typical experience, it takes about 3 to 4 months from, you know, making the decision to move forward to actually getting qualified in the offering. That is just a general time period. The cost associated or around upfront on legal and financial, I mentioned earlier between 50 and 100,000. Would you agree with that? Somewhere within the ballpark?
For doing the Reg A?
For doing the Reg A plus, yeah.
Yeah, that's probably about right. And I think, you know, CrowdCheck Law, if I could give them a plug, they do a terrific job, and they offer, you know, fixed rates for legal, so you can control that cost. And there were a number of other fine law firms that specialize in crowdfunding. I don't know any offhand, but they do exist that will help you lock that number in, so that if you are succeeding in your Reg CF, and you want to set aside some proceeds to make sure you get the Reg A all squared away, you can nobly attain that.
Great. And then we went live in January. What does launch look like, and what does the marketing strategy look like off the heels of a successful regulation crowdfunding?
Well, in a perfect world, you can keep them a little just inside 6 months between the two. And you've got to jam, you've got to get some milestones under your belt to get that valuation. So if that's not something that's realistic for your business based upon the kinds of milestones you have, then you need to accept that, and it might take longer. But if you can, do it, because your Facebook audience, those 3 or 4 months that you started on the teaching Facebook audience, how to market, will be alive, and still pretty useful. After 6 months, it's just an idiosyncrasy of Facebook that those things disappear. So there's a big incentive to kind of book them. I will tell you, we actually lost our audience. We had to rebuild it at the start of the Reg A, because we had, I think, a little more than 6 months in between. But that's okay, because you still have some things in Facebook which stick. And of course, you have a built-in number of, we had 3,000 some odd investors that we were able to blast email at the start of the campaign. We even had a wait list, thanks to StartEngine, that was able to provide some fuel for the Reg A at the outset.
And so now you're raising up to $10 million, is that correct?
That's right, yeah.
Great. And we're at how much right now?
3.1 as of this morning.
3.1.
Maybe 3.2, I don't know. Moving pretty
So
good.
I think the audience would love to know how you were able to raise $3 million so quickly.
Sorry, say that again?
I think the audience would love to know, how were you able to raise that $3 million so quickly? What does the marketing look like? We're getting questions about the specific ads. I think people are very curious to know, what do the ads actually look like? But, I just want to get a sense from you of how has the Facebook advertising been able to generate close to 500,000 raised per week? What are the costs associated, and what are the best practices that maybe you could share?
Yeah, I don't want to give away anything that's too proprietary, but I've spoken, I think, about what the returns on the spend are, and the fact that the spend is creating both customers and investors. I think it takes someone who's going to do the Facebook marketing for you full time, and StartEngine offers a service that does that. So high marks there. I think it takes a very fine-tuned audience built over time in order to do it. And what happens, come in and spend a giant pile of money all at once, right? You spend, increasing amounts slowly over time, and you see how the return is going, and if the return is stable, right? And then you do that by shepherding very carefully the advertisements that are getting you the highest return on spend, right? And then you're layering in new things in case those things get stale. So it's an ongoing process. Does that answer your question, Alan?
Yeah, definitely. And then just on the theme of always be raising, Mike, how has both the regulation crowdfunding offering and the Reg A Plus, how has the ability to withdraw in cash consistently affected your business?
It is truly the greatest way to bootstrap that I've ever seen. Not only can you bootstrap the marketing spend, if the world likes your idea, but you can bootstrap hitting milestones on the way. You made a great point, Alan, which is that often you have only money from sales if you have sales, and you're kind of sucking wind a little bit, and then you get a big pile of money, and then then you're okay. And then, in the traditional venture capital model, you get that money, and then in 18 months it's gone, and then you're back to the venture capital market, and they extract big concessions from you, and then you have more, and then more and more, and it all grows, and hopefully it's wealth enhancing for everybody. But I'm going to make a short answer on this, but it's something I feel very strongly about. The best deals in venture capital in the United States are confined largely to the top 10 or 15 venture capital funds, mostly in Silicon Valley. And their funds are so large that their mandate is, if you don't have a $10 billion business, they can't take you. because 9 out of 10 of their investments aren't going to work, and they're only going to own a third of you in the end. So if you're a $10 billion company and they own a third of you in the end, that means their investment is worth $3 billion, right? Well, their fund was a $500 million fund, so they've made their investors 6 times their money, because 6 times 5 is 30, if you follow the math. Okay, that's a pretty good return, right? But the problem is that 9 out of 10 times they're wrong. So theoretically, they should be returning more, but that isn't even an issue, right? Because you could debate the merits of that position, and or even the math if you wanted to. But one thing you can't debate is that a lot of companies that ought to be getting funded, that are good ideas, aren't, because they aren't big enough ideas. Jet Token happens to be a very big idea, we believe. But touching on something, and I'll stop here. We did this accelerator program, as I mentioned, in Israel. Over 8 years, half of the companies that came out of that program still exist, and it's largely because, which is an incredibly high hit rate, and it's largely because they don't have to meet that $10 billion criteria. Companies that aren't $10 billion in size but still grow are good for the economy. They create jobs. We've hired people, and I think that is the wisdom of Reg CF and Reg A, which is, let's change the standard a little bit of who gets venture funded and watch the economy grow because of it.
Well, Mike, I couldn't have said it better myself. I guess the last thing that I want to wrap up with is final piece of advice to entrepreneurs that are considering this option of fundraising.
You're here because you have true grit and you're willing to dig in and believe in an idea. StartEngine is a great partner for that. It's a great partner for you. It's been a great partner for us. Spend the money, build the relationship, and grow.
All right. Well, thank you so much, Mike, for joining us today. Thank you, everyone in the audience who joined us. We had over 120 people join us today, so we're thrilled about that. Mike, thanks for taking time out of your busy schedule, and we'll see everybody soon.
Thanks all.
All right.
Thank
Take
you.
care.